ExamPrep.School. Massachusetts Advisor's Exam for Property and Casualty Insurance. Exam code SERIES 16-57. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, business owner's policy, commercial package policy, dwelling policy, general insurance, homeowner's policy, insurance regulation, other coverages and options, property and casualty insurance basics, workers' compensation insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under M, GLC, 175, Section 162 grams, an individual applying for an initial Massachusetts insurance producer license must complete a minimum of how many hours of pre-licensing education? A. 16 hours. B. 20 hours. C. 24 hours. D. 30 hours. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is 20 hours, as MGLC. 175, Section 162 grams, mandates a minimum of 20 hours of pre-licensing education for initial producer applicants. Reason A is not correct. Fewer than 16 hours does not satisfy the statutory requirement. Reason C is not correct. 24 hours exceeds the minimum specified in the statute. Reason D is not correct. 30 hours exceeds the statutory minimum and is not required. Question 2. Under Massachusetts non-resident producer licensing reciprocity, a non-resident applicant must hold a valid resident license in the home state and maintain which of the following? A. A principal place of residence in Massachusetts. B. A principal place of business in the home state. C. An active surplus lines license. D. A branch office in each county of residence. The correct answer is B. The correct answer is that the non-resident must maintain a principal place of business in the home state, as required by Massachusetts reciprocity under MGLEC 175, Section 162 hours. Reason A is not correct. A Massachusetts residence is not required for non-resident reciprocity. Reason C is not correct. A surplus lines license is not part of the standard producer reciprocity criteria. Reason D is not correct. There's no requirement to establish branch offices in multiple counties. Question 3. A temporary Massachusetts insurance producer license issued due to military service or death of a licensed producer remains valid for a maximum of how many days? A. 60 days. B. 90 days. C. 120 days. D. 180 days. The correct answer is B. The correct answer is 90 days, since Massachusetts regulations cap temporary producer licenses at a 3-month duration. Reason A is not correct. 60 days is shorter than the statutory maximum period. Reason C is not correct. 120 days exceeds the allowed duration for a temporary license. Reason D is not correct. 180 days exceeds the statutory limit for a temporary license. Question 4. XYZ. Risk Advisors, Inc. recently applied for a Massachusetts business entity producer license to sell property and casualty insurance. The firm designated John Doe as its responsible producer, but John currently holds only an accident and health producer license. Under Massachusetts law, what must XYZ Risk Advisors do before its business entity license can be issued? A. Provide a corporate surety bond in the amount specified for producers. B. Submit audited financial statements for the past 2 years. C. File personal biographical affidavits for each owner holding more than 10% interest. D. Have the designated responsible individual obtain the P&C producer license. The correct answer is D. The correct answer is that the designated responsible individual must hold the appropriate line of authority. Massachusetts law requires a business entity to designate a natural person licensed in the same lines. Since John holds only an accident and health license, he must obtain a property and casualty producer license before the entity's license can be issued. Reason A is not correct. Massachusetts does not require a corporate surety bond for business entity producer licenses. Reason B is not correct. While financial documentation may be requested in certain regulatory reviews, audited statements are not a prerequisite for a business entity license. Reason C is not correct. Personal biographical affidavits for owners are not required to satisfy the designated responsible producer requirement. Question 5. Under Massachusetts insurance regulation, how often is the commissioner required to conduct a financial examination of each domestic insurer? A. Annually. B. Every 3 years. C. At least once every 5 years. D. Only when public complaints are received. The correct answer is C. The correct answer is that Massachusetts law mandates financial examinations of domestic insurers at least once every 5 years to ensure their solvency and compliance. Reason A is not correct. An annual examination requirement would be overly burdensome and is not specified in the statute. Reason B is not correct. A 3-year interval is more frequent than the law requires for domestic insurers. Reason D is not correct. Examinations are not limited to complaint-driven events. They are conducted on a set periodic schedule. Question 6. Under Massachusetts law, to maintain a certificate of authority, a property and casualty insurer must file which of the following within 90 days after the close of its fiscal year? A. A certified copy of its articles of incorporation. B. A sworn audited financial statement by an independent CPA. C. A quarterly premium tax report. D. An annual complaint log for policyholders. The correct answer is B. The correct answer is that insurers must submit a sworn financial statement audited by an independent certified public accountant within 90 days after fiscal year end to maintain their certificate of authority. Reason A is not correct. Articles of incorporation are required at application but not as an annual filing to maintain authority. Reason C is not correct. Premium tax reports are filed separately on a quarterly basis and do not by themselves maintain the certificate. Reason D is not correct. A complaint log is not a required annual filing for certificate maintenance under state law. Question 7. On March 1st, Crestfield Mutual, a Massachusetts property and casualty insurer, plans to increase its homeowners insurance rates by 8% statewide due to adverse loss experience. Under Massachusetts law, what procedural requirement must Crestfield Mutual satisfy before implementing these new rates? A. File the proposed rate change with supporting actuarial certification and loss data at least 30 days before the effective date. If not disapproved within that period, the rates become effective. B. Implement the new rates immediately and submit the rate filing to the commissioner within 15 days after the effective date. C. Request a formal hearing within 10 days of filing to permit immediate use of the rates pending the hearing outcome. D. Await explicit prior written approval from the commissioner before putting the new rates into effect. The correct answer is A. The correct answer is that the insurer must file the rate proposal with supporting actuarial certification and loss cost data at least 30 days prior to the effective date. And absent disapproval within that period, the rates take effect per the file and use system. Reason B is not correct. Massachusetts does not allow immediate implementation followed by late filing. A 30-day prior filing period is mandatory. Reason C is not correct. A formal hearing is not required before implementation. Hearings occur only if the commissioner challenges the filing during the waiting period. Reason D is not correct. Massachusetts uses a file and use system rather than requiring explicit prior written approval before rate changes become effective. Question 8. Misrepresentation, as defined in Massachusetts insurance regulations regarding false advertising, most nearly means A. Making a false statement about the benefits or terms of an insurance policy to induce purchase. B. Providing policy dividends to insureds on a selective basis. C. Publishing false statements that tarnish a competing insurer's financial stability. D. Offering premium reductions to select individuals in exchange for policy purchases. The correct answer is A. The correct answer defines misrepresentation as knowingly making false or misleading statements about policy terms or benefits to induce a purchase. Reason B is not correct. Selective dividend payments relate to discrimination in benefits rather than misrepresenting policy terms. Reason C is not correct. Publishing false statements about a competitor is defamation, not misrepresentation of one's own policy. Reason D is not correct. Offering premium reductions is a form of rebating, not misrepresentation of policy terms. Question 9. Which of the following actions would be considered prohibited defamation of a competing insurer or producer under Massachusetts law? A. Entering false statements into claim records of a rival insurer. B. Advertising one's own policy with exaggerated benefits. C. Communicating false information about another insurer's financial soundness to prospective applicants. D. Offering unauthorized discounts to insureds for purchasing a competitor's policy. The correct answer is C. The correct answer describes making false statements about a competitor's financial soundness to injure reputation, which constitutes prohibited defamation. Reason A is not correct. Falsifying claim records constitutes fraud against the insurer itself rather than defamation of a competitor. Reason B is not correct. Exaggerating one's own policy benefits is false advertising, not defamation of another insurer. Reason D is not correct. Offering discounts is rebating and does not involve defaming a competitor. Question 10. Under Massachusetts insurance regulations, unfair discrimination in rates, benefits, or policy terms occurs when an insurer A. Offers lower deductibles to policyholders with tiered loyalty status. B. Classifies insured solely by historical loss and expense data. C. Applies credits for safety devices installed in the insured vehicle. D. Charges a driver a higher premium solely because of their race. The correct answer is D. The correct answer describes charging different premiums based solely on race, which is prohibited unfair discrimination. Reason A is not correct. Offering loyalty-based deductibles is a permissible rate variation under classifications. Reason B is not correct. Using historical loss and expense data for classification is actuarially justified. Reason C is not correct. Applying safety device credits is an approved rate-making factor. Question 11. In insurance terminology, which statement best distinguishes a speculative risk from a pure risk? A. A risk that offers the possibility of both gain and loss. B. A risk that arises solely from natural events. C. A risk that can only result in a financial loss. D. A risk that is non-transferable and uninsurable. The correct answer is A. The correct answer is a risk offering both gain and loss, which defines speculative risk. Pure risk can only result in loss or no loss. Reason B is not correct. This describes a peril source rather than distinguishing risk types. Reason C is not correct. That defines pure risk, not speculative risk. Reason D is not correct. Insurability and transferability relate to hazard, not risk classification. Question 12. Which of these definitions best describes exposure as used in insurance? A. The measure of value or units exposed to potential loss. B. The factor that amplifies the likelihood of a peril occurring. C. The legal obligation that may arise from negligence. D. The estimated severity of a loss if an event occurs. The correct answer is A. The correct answer is the measure of value or units at risk. Exposure quantifies what is subject to possible loss under a policy. Reason B is not correct. That describes a hazard rather than exposure. Reason C is not correct. That defines liability exposure, not exposure measure. Reason D is not correct. That describes loss severity, not exposure quantity. Question 13. After purchasing new fire insurance, the owner of a storage facility stops enforcing routine equipment inspections and ignores safety protocols, increasing the likelihood of a fire loss. Which type of hazard is demonstrated in this scenario? A. Physical hazard. B. Moral hazard. C. Moral hazard. D. Legal hazard. The correct answer is C. The correct answer is morale hazard because the insured's reduced care and indifference towards safety measures increases the frequency of loss without intent to defraud. Reason A is not correct. This is not a physical hazard, which involves inherent property conditions rather than an attitude of carelessness. Reason B is not correct. This is not a moral hazard, as there is no intentional wrongdoing or fraud by the insured. Reason D is not correct. This is not a legal hazard since it does not involve laws or regulations affecting loss frequency. Question 14. Which of the following statements accurately describes an ownership difference between stock insurers and mutual insurers? A. Stock insurers offer policies on an assessable basis, while mutual insurers offer non-assessable policies. B. Mutual insurers distribute profits to shareholders, while stock insurers distribute profits to policyholders. C. Mutual insurers issue shares to raise capital, whereas stock insurers raise funds through policyholder premiums. D. Stock insurers are owned by shareholders, whereas mutual insurers are owned by policyholders. The correct answer is D. This option is correct because stock insurers raise capital by issuing shares to shareholders and are owned by investors, whereas mutual insurers are owned by their policyholders and have no stockholders. Reason A is not correct. This is incorrect because assessable policies are more commonly associated with some mutual insurers, not stock insurers. Reason B is not correct. This is inaccurate because mutual insurers distribute any surplus to policyholders, not shareholders. Reason C is not correct. This is wrong since mutual insurers do not issue shares. They rely on premiums and policyholder equity. Question 15. Which characteristic is typical of fraternal benefit societies regarding their policyholders? A. They operate for profit and distribute earnings to investors. B. They issue policies that pay dividends at guaranteed rates. C. They restrict membership to corporations rather than individuals. D. They require policyholders to be part of a common religious or ethnic group. The correct answer is D. This option is correct because fraternal benefit societies typically require members to share a common bond, such as religious, ethnic, or cultural ties, and issue insurance to those members. Reason A is not correct. This is inaccurate because fraternal benefit societies are nonprofit organizations and do not distribute earnings to investors. Reason B is not correct. This is incorrect since dividends from these societies are not guaranteed, but are based on organizational performance. Reason C is not correct. This is wrong because fraternal benefit societies restrict membership to individuals sharing a bond, not to corporations. Question 16. A group of HVAC contractors in Massachusetts have pooled their resources to form a risk retention group under the Liability Risk Retention Act to address their liability exposures. The group now seeks to insure their company-owned vehicles through the risk retention group. Which of the following coverages can the risk retention group lawfully provide? A. Physical damage coverage for the risk retention group members' vehicles. B. Commercial auto liability coverage for claims arising from business operations. C. Statutory workers' compensation insurance for employee injuries. D. Commercial property coverage for members' business equipment. The correct answer is B. The correct answer is commercial auto liability coverage because risk retention groups are authorized under federal law only to insure and pool liability risks. They are prohibited from providing property or workers' compensation coverages. Reason A is not correct. Risk retention groups are limited to liability exposures and cannot insure property damage to physical assets. Reason C is not correct. Workers' compensation is an excluded coverage type that risk retention groups cannot underwrite. Reason D is not correct. Property coverage is outside the scope of liability insurers under the risk retention group statute. Question 17. Under agency law, an insurer is considered the principal, and a producer is its agent. Which term best describes the insurer's legal responsibility for the acts of its producer within the scope of authority? A. Vicarious liability. B. Direct liability. C. Fiduciary duty. D. Caveat emptor. The correct answer is A. The correct answer is vicarious liability because under agency law, a principal is legally responsible for the agent's acts when performed within the agent's scope of authority. Reason B is not correct. Direct liability would require the principal's own wrongful act or negligence rather than imputed responsibility for the agent's actions. Reason C is not correct. Fiduciary duty refers to the agent's obligation to act in the principal's best interest, not the principal's liability for the agent. Reason D is not correct. Caveat emptor is a buyer's doctrine and does not relate to insured liability for an agent's conduct. Question 18. Which of the following actions is most likely within the scope of a producer's express authority granted by an insurer under a standard agency contract? A. Altering policy coverage provisions. B. Negotiating commission splits with other brokers. C. Issuing binders for coverage within specified limits. D. Granting premium discounts beyond insurer guidelines. The correct answer is C. The correct answer is issuing binders for coverage within specified limits, as express authority in an agency contract typically allows producers to bind coverage up to predetermined thresholds. Reason A is not correct. Altering policy provisions exceeds typical express authority unless explicitly granted in the contract. Reason B is not correct. Commission negotiations with other brokers are not part of a producer's express authority from the insurer. Reason D is not correct. Granting discounts beyond insurer guidelines would exceed the parameters of express authority. Question 19. A personal lines producer has routinely issued oral binders for homeowners' policies under the insurer's knowledge. After a policy expires, an applicant calls and the producer orally agrees to extend coverage under the same terms without written confirmation. Which best describes the producer's authority in this scenario? A. The producer lacked authority to bind coverage after expiration without express written consent. B. The producer exceeded implied authority since coverage extensions require explicit insurer approval. C. The producer acted within implied authority through customary practice of issuing oral binders. D. The producer only possessed apparent authority from the insured's perception, not actual practice. The correct answer is C. The producer's consistent, insurer-approved practice of issuing oral binders establishes implied authority to extend coverage without separate written approval. Reason A is not correct. This choice overlooks that the producer's consistent binder practice constitutes implied authority to continue coverage. Reason B is not correct. This response wrongly limits authority, failing to recognize that regular binder issuance creates implied binding authority. Reason D is not correct. This distractor misstates that binding power is based on apparent authority rather than the insurer's customary course of dealing. Question 20. Which of the following is not one of the four elements required to establish negligence in a tort claim? A. Legal duty owed by the defendant. B. Comparative negligence of the claimant. C. Proximate cause linking breach to injury. D. Breach of the applicable standard of care. The correct answer is B. The correct answer is comparative negligence because the four elements are duty, breach of duty, proximate cause, and actual damages. Reason A is not correct. A legal duty is required and is one of the four elements, making this option incorrect. Reason C is not correct. Proximate cause is essential for linking breach to harm, so this option is incorrect. Reason D is not correct. A breach of the standard of care is one of the elements, so this option is incorrect. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.